Alrighty, guys, earnings season is back officially starting this week. We have a lot of companies to break down in this video. We're going to go over the numbers, the estimates, the charts, the stocks, all that good stuff. But before we do that, guys, of course, don't forget to get your free money for MooMoo, the sponsor of today's video. All you guys have to do is go down below or just go to stocksurfest.com/MooMoo, open up your account and fund it with at least $100. You get 5 stocks, each up to $2,000, and fund your account with at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys, fund it with at least $5,000. On top of those 15 stocks, you also get a free share of either Tesla stock or Google, guaranteed, which, guys, that part of the promo is limited time, so use that link down below. And of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. Let's dive right into the video. And by the way, it's currently about 9:15 p.m. on the East Coast. It is a little bit later than I usually record, but I figured better late than never, and here we are, guys. And looks like the futures market is selling off. We have the S&P futures. It looks like they're down. Where the heck are they? Down about 0.02%, so they're more at break even. But it looks like here we have the Russell and the NASDAQ futures. Those are down a little bit more. It looks like the Russell futures are down 0.16%, and the NASDAQ's down 0.1% right now. So we'll see if that bleeds into the morning or what. You know, who knows? We might rip into the morning for all we know. So we'll see, guys, if this red in the futures market leads into the morning. It doesn't necessarily have to. I'm sure you guys know the futures market flips all the time. For all we know, we could wake up and all the indexes could be heavily in the green. Totally possible. So we're going to break down a lot in this video, guys. Let's just dive into it. So again, the futures are down a little bit right now, which we'll see how that ends up playing out. And before we actually dive into the stocks, guys, which we have 7 stocks to break down in this video, all of these companies are reporting earnings. Let's break down this economic data that's coming out this week, which is very important, and you guys might have guessed it, maybe not. I'll give you a second. Try and guess it, guys. Let me actually make this a little bit smaller. There we go. Or let me fit or let me actually let me make it fit the screen. There we go. And I'll make my face a little bit smaller. There we go, guys. We have the CPI data coming out this week. You probably guessed it. Maybe not. I don't know. But if you didn't know, guys, this week on, I believe, Wednesday, Wednesday, 8:30 a.m., yep, we get the CPI month over month, the year over year, and of course, we get the core CPI data, which excludes food and energy. So the CPI month over month, what's that looking like? 0.3% versus, what was it last month? 0.1%. Yeah, so that's looking to come in a little bit hotter, guys. Inflation is expected to spike up a bit, 0.3% again compared to 0.1% last month. But look at that, guys. The yearly number is 3.1% projected, which is nuts compared to what we saw last time, or last month, where it was 4%. That's insane, guys. So inflation is really starting to come down, but of course the Fed's still keeping the pedal to the metal. We're still getting 2 more rate hikes projected in this year. We'll see if it comes in more than that, less than that. I don't know. Time will tell. And core CPI, guys, is also coming down, 0.3% versus the 0.4%, or rather 0.4% last month. So that month over month is coming down, and really the only number that's going up is the month over month for CPI, which last month, again, it was 0.1%. Now we're looking at 0.3%. So that's on Wednesday at, again, 8:30 a.m. on the East Coast. That's going to be a big day here for the markets. Let's see. We also get PPI, I believe that is on Thursday, right? Yeah, Thursday, 8:30 a.m. we get PPI. That's also very important to look out for. And with that being said, guys, and of course, we'll break all that down here on the channel. Make sure you guys subscribe and hit that notification bell if you have not done so already. And now, guys, let's break down the companies that are reporting earnings this week as earnings season is officially kicking off. Let's break these companies down. So the first one is Pepsi, ticker symbol PEP. Let me pull that up and show you guys. Pepsi's reporting earnings, I believe, on what day is this, guys? They're on the 13th, so they're later in the week. I believe that's on Thursday. Yeah, the 10th's on Monday, 11th Tuesday, 12th Wednesday. Yeah, 13th is on Thursday. They're in the morning, guys, and this stock's been beaten down a bit over the past couple of weeks, and rightfully so, in my opinion. I think it got way overvalued, and it's not like it came down a lot, guys. I mean, it's only down about $13 from the recent highs, which is only about 7%. But it's something. And again, it got way overbought in my opinion, and it's arguably still overbought, which we're not, or not overbought, overvalued rather. But we're not going to get into that in this video. We might do a fundamental analysis maybe in the future on Pepsi. Maybe we'll see if there's demand for it. Let me know down below in the comments. But right now, Pepsi is on a downtrend. Well, not overall on the 4-hour chart, but over the past couple of weeks, almost 2 months now, it's down again 7% with earnings coming up, and they're looking to do EPS of $1.95 versus the $1.86 last year, and revenue of $21.73 billion versus the $20.23 billion from last year, and that's projected revenue growth of around 7.4%. Not too bad. And looking at this in the very short term, guys, again, we're down 7% over the past 2 months, and we are in a wedge as well. Do you guys see this? We have higher lows being made, but lower highs at the same time, pretty much ever since, again, the middle of May. So let's see what direction Pepsi ends up picking. Do we dump under this wedge, start taking out the lows from, end of June, back in early June? That would not be good, obviously, for the Bulls. Or do we turn things around? Maybe break above the 180 SMA, $188, and start to see more upside from there. I don't know. What do you guys think? Let me know down below in the comments. And again, their earnings are on Thursday in the morning. That's Pepsi, ticker symbol PEP. We also have Delta Airlines, guys. Get ready. And airlines reporting, I believe, on Thursday as well. Let me double check. Probably not. Thursday in the morning, same day as Pepsi. Delta's looking to do EPS of $2.36 versus the $1.44 from last year. That's pretty good. Very good. On revenue of $14.44 billion versus the $12.31 billion from last year. So Delta year over year, guys, and a lot of this is probably being priced into the stock as the stock's up a lot over the past couple of months. Delta's looking to do very well compared to last year's numbers, and look at their stock, guys, up 47% over the past roughly 2 months. That's a pretty big move there for Delta, and revenue's looking to come in, or I said that already, but projected revenue growth is roughly 17.3% according to Yahoo Finance. And like I said, guys, we're up 50% pretty much in the past 2 months. I think the stock, to be honest, is a little bit overbought. I would be careful here, very patient with it. But, if it were to come down a little bit, lower mid-40s, I would definitely consider it as a trade. A lot of these that we're talking about today, guys, are for trades, not for long-term investments, because some of these are just way too expensive, like Pepsi, guys. I would not be buying Pepsi personally. I'm not telling you what to do, obviously, but at these levels, I would not personally be buying Pepsi. So that's Pepsi and Delta. They're both on Thursday morning. We also have the banks coming in hot this week. Later in the week, we have JP Morgan, ticker symbol JPM, which now is pretty much at a big resistance that you guys can see on the 4-hour chart here. We have higher lows being made, but at the same time, resistance at about 145 to 147. Will this triangle play out, or will we fail? Time will tell. And again, they have earnings coming up later on in the week. I think they're on Thursday or Friday. Yeah, Friday in the morning. I feel like they're always on Friday, right? Yeah, banks are, for the most part, on Friday, at least to kick off earnings. We have EPS for them looking to be around $3.97 versus the $2.76 from last year. That's pretty good. And revenue for JP Morgan's projected to be $38.97 billion versus the $31.63 billion from last year. So they're crushing year over year on EPS and on revenue, and projected revenue growth is around 23%. Not too bad, guys, not too bad. And let me set my alert at let me do it now at 140. We'll put it at 145.50. Let me do that now. Markets that we're above 145.50, and we'll see where it goes from there. Let's see, guys. We also have United Health Group this week, which I believe is on Thursday. Let me see here. UNH is the ticker for those of you guys that didn't know. Let me see. They're on Thursday, I believe, right? No, they're on Friday. Friday morning, guys. In the morning, we have United Health Group reporting earnings, and this stock has been hit very aggressively over the course of this year. And I mentioned recently how, and you guys know this, I mean, a lot of people know this, but during 2022, a lot of people were flooding into safer stocks, right? UNH being one of those stocks, and that's when tech stocks got destroyed. And now they're doing very well. You guys probably know how that works, right? A lot of big money flooded into the safer stocks, but at the same time, they were dumping out of that and buying into dumping out of those stocks, and they started buying tech stocks last year, which I know a lot of retail was buying. I was personally buying a lot of tech stocks, and now we've seen kind of that rotation slowly over the past couple of months. And a lot of people got out of stocks like these about a year ago, but you know, you can see the performance has not been good in 2023. It's not been good at all. It started off the year at around $540. Now we're at $460, guys. This stock's down about 14%. And again, a lot of people have been rotating out, going into tech. And it looks like that's continuing up until right now when I'm filming this video, and it might continue into the future. Who knows? We'll see, guys. Time will tell. But UNH is on Friday. They're looking to do EPS of $6.06 versus $5.57 last year, so that's good. That's above last year. And revenue is looking to be $90.97 billion versus $80.33 billion last year. Pretty good. Projected revenue growth is right around 13%. Not too shabby there for UNH, but the chart does not look so pretty, guys. I'll be honest. I'm going to set my alert at around 480. We'll see if it reverses above that. If it does, great. If not, well, I'm not going to touch it, guys, personally. But if we do start reversing over 480, 500, that's where this could really start to break out, in my opinion. We also have a couple more banks. Like I said, we have a lot of banks starting to report. We have Citigroup, I believe, on Friday, right? Let me double check that. Yep, Friday in the morning. And this stock's been downtrending for a good couple of months. But actually, at the same time, we've been holding support at around $44, $45. So we actually kind of have a descending triangle here on Citigroup, which makes me kind of want to wait until earnings, which again are on Friday, to see what direction this stock ends up picking. So EPS is looking to come in at $1.40 versus $2.19 last year. So that's actually down year over year. And revenue's coming in at $20.08 billion projected versus the $17.03 billion from last year. That's good. And projected revenue growth is right around 18. Actually, no, I read the wrong line. Holy crap, guys. Erase what you just heard out of your mind for revenue. I read the Wells Fargo line, which is the next stock we're going to talk about. Citigroup's revenue estimates $19.68 billion versus the $19.64 billion. So revenue for Citigroup is flat year over year projected. And again, the EPS is $1.40 projected for this quarter. Last year was $2.19. Not looking good. So, yeah, Citigroup's flat on revenue, but Wells Fargo, which I got a little bit ahead of myself there, guys, they're looking to do revenue of $20.08 billion versus $17.03 billion. So they're growing about 18%. Not bad, Wells Fargo. Pretty good, actually. And EPS for them is looking to be about $1.18 versus 74 cents last year. And Wells Fargo's actually been slowly reversing. I mean, yes, we're still overall in a downtrend, you could argue, based on that trend line here on the 4-hour chart, but we are above the moving averages on the 4-hour chart. We just took the highs out from the middle of June, also from the middle of April. There could be more upside here as earnings are coming up for Wells Fargo on, of course, you guessed it, Friday. And the last stock, guys, last but not least, and by the way, if you stuck till the end, I appreciate you all for watching. Hit that like button, make sure to subscribe, and let me know your thoughts in the comments, as always. And if you want me to cover any other stocks, feel free to drop some tickers. Don't be shy, guys, in the comments down below. And the last stock is Progressive, guys. Ticker symbol P, what the heck's the ticker on this one? PGR, almost forgot for a second. Progressive stock has been down for the past couple of months. I mean, it peaked at about 150 back in the middle of April. Now we're in the middle, almost in the middle of July, and it's down 12.5%, guys. Holy freaking moly. And we arguably have a descending triangle on Progressive, do we not? You guys probably see that right there on the 4-hour chart. So they're projected, let's see here, their earnings are on the 13th, so that's Thursday morning. They're projected to do 94 cents versus the 96 cents in EPS from last year on revenue of $15 billion versus $12.42 billion last year. So projected revenue growth is actually over 20%, but EPS is actually going to be declining year over year if they do come in at 94 cents. And this pattern looks exactly like Citigroup. We have the descending triangle, which kind of makes me want to wait until earnings come out and see kind of what direction we pick, which is what I do usually anyway when it comes to trading stocks around earnings, guys. These days, I don't hold through earnings. I don't gamble through earnings. I don't buy calls, buy puts. I used to do that earlier on in my trading career, but now I just kind of let earnings come out, guidance come out, and I kind of see how the stock reacts, and we push on forward from there, guys. So we're going to set an alert. I'm going to set my alert at, let me put one here at maybe $140 on PGR, and we'll see see where it goes from there. So what do you guys think? Let me know your thoughts down below in the comments. Feel free to hit that like button and subscribe. And guys, don't forget to get your free money for MooMoo, the sponsor of today's video. Up to 16 stocks, each up to $2,000. All you guys have to do is go down below or just go to stocksurfest.com/MooMoo, open up your account, funnel with at least $100, and you get 5 stocks, each up to $2,000 right off the bat, and fund your account at least $1,000. You get 10 more stocks, totaling 15 stocks. And listen to this, guys, fund it with at least $5,000 on top of those 15 stocks. You also get another free share of either Tesla stock or Google, guaranteed. And guys, that's limited time, just for a couple more days. So use that link down below. And of course, that is an affiliate link. It helps out the channel. And with that being said, cheers. I'll catch you guys later.